With the potential changes coming to pensions from April 2027, whereby your pension plan could be liable to inheritance tax, it's important to be aware of the inheritance tax-free allowances that are available for you to use. Some of them are annual, so if you don't use them, you lose them. Here is a little reminder of the allowances currently available. First, the nil rate band, NRB, is $325,000 per person. Second, the net residential nil rate band, RNRB, is up to $175,000, providing the following. The property must be inherited by direct descendants, children, grandchildren and other direct descendants. This includes stepchildren, adopted children and foster children. The deceased must have owned the property at some point. It doesn't need to have been their main residence at the time of death, but they must have lived in it at some time. Downsizing. If the deceased sold or downsized from a more valuable home after the 8th of July 2015, the estate may have qualified for residential no rate band under the downsizing provisions. If the property is held in a trust, however, it may still qualify depending on the type of trust and the terms under which the property is held. These allowances are transferable. Unused nil rate bands and residential nil rate bands can be transferred to a spouse or civil partner. What about gift exemptions? Gifts made more than 7 years before death are fully exempt from inheritance tax. Annual gifts of $3,000 per year, which can be carried forward 1 year if unused, are always available. Small gifts of up to £250 per person is available to an unlimited recipient. Wedding or civil partnership gifts of $5,000 from parents, $2,500 from grandparents or $1,000 from anyone else are also available. Regular gifts from income are exempt if they do not affect the giver's standard of living. That's something very important to be aware of. What about charitable gifts? They're fully exempt, and if you leave 10% or more of your estate to charity on death, this reduces your inheritance tax rate from 40% to 36%. Political party gifts are fully exempt if the party has at least one MP elected to the House of Commons or has received at least 150,000 votes in a general election. Business relief, up to 100% relief on qualifying business assets is available until the 5th of April 2026. Agricultural relief of up to 100% relief on qualifying agricultural property is also available till the 5th of April 2026. From the 6th of April 2025, the following changes will take effect. On agricultural property relief, APR, the scope will extend to include land managed under environmental agreements with or on behalf of the UK government, devolved bodies, public bodies, local authorities or approved responsible bodies. The 100% relief will apply to the first £1 million of combined agricultural and business property, with 50% thereafter. The 100% relief for business will be limited to the first £1 million of combined agricultural and business property. Above this amount, the relief will be reduced to 50%. The rate of relief for shares not listed on recognised stock exchanges will be reduced from 100% to 50%, such as alternative investment market AIM shares. The tax landscape continues to evolve and is likely to do so even more under the new Labour government. It is therefore imperative that you keep abreast of the current and proposed rules at all time. My caveat to giving you this reminder is also to be prudent and do not rush to make dramatic changes until we are fully aware of what and how the proposed pension changes could affect you. Like all good things, the success is often all in the planning.